in the first live stream for Investing City, and I hope you can just bear with me because this will be a little bit of a learning process just to figure out kind of the whole deal here. But I just want to give you a brief background on myself, a brief background on what I want to do, and then you can kind of decide whether you want to follow or not. So, my name is Ryan Reeves. I'm 21. I graduated from Pepperdine University in 3 years, and I really just am taking this next year to try to build a business. And the business is called Investing City, and it's a website, www.investingcity.org. And the goal is really to teach younger people how to invest. And I think investing is really important for a number of reasons. And yeah, I'll get into that for sure. But this channel will be mostly about just streaming how I research stocks. And I've been researching stocks since I was 12 years old, so I have almost about a decade of experience, even though I'm fairly young in the grand scheme of things. But I'm a very fundamental researcher. This is not a channel of looking at the charts and like doing technical analysis all day. I'm definitely not a trader. I trade decently often, but I try to really look at the businesses, look at the financials. So if this stuff kind of bores you, then feel free to kind of move on. I know day trading is more exciting maybe because you're looking at these charts and you're trying to hop in and out. So there's always more going on. So I don't even know if Twitch is the right sort of medium for what I'm interested in doing, but I thought might as well stream my research process and some people can learn a thing or two. And I'm definitely always learning. So if you have anything that you want to bring up, a stock tip, how you research, things like that, then I'm for sure open. Just leave it in the chat. And you can follow me on Discord at investing_city. And I just opened up a chat room on StockTwits. And you, of course, can follow my website. Have some subscriptions on there. And so, yeah, I just want to get into it and kind of go over broadly what to expect. And kind of, we'll jump into a stock actually, just kind of high level what I'm looking for, and we'll actually read through an earnings call transcript, and so we can go through one of those. And it's actually an interesting company. If you haven't heard of it, it's called Nvidia. But without further ado, let's hop right in. So Nvidia reported their third quarter earnings yesterday after the bell. After the bell just means after the stock market closed. So there were really high expectations, actually, and it was a bit surprising to see the results. So here on the left side, I have my financial database, where I basically just pull the numbers from each of the quarterly earnings reports, and then that gives me a better idea of kind of how the company is progressing and the movements of the company and stuff like that. And so one thing I really wanted to go over was the numbers. So 3 things that I think are really important in order to pull from these quarterly reports, and we can go into how to actually pull the numbers and what to look for, are revenue. So we have sales right here. Then we have income, net income, and then there's something called non-GAAP versus GAAP, and we can go into that later. And then free cash flow. Also included gross profit, which is just the revenue minus the cost of goods. So Nvidia sells something called GPUs, and GPUs stand for graphical processing unit. And so a lot of Twitch streamers will probably be familiar with these because GPUs actually started out as they were basically the brains inside gaming computers. So they displaced CPUs, computing processing units, and what GPUs did was basically they were just much higher power. And so these gamers, when you're looking at if you're playing League or World of Warcraft, you want like the best graphics, and these graphical cards really allowed people who are making these games to construct way better graphics. And so that's kind of why they overtook the Intels of the world, the AMDs, and it's been doing really well for the past couple of years. I first bought the stock when it was in the low 20s. Sadly, I sold a little bit too early, and it got all the way this year to about 260, so that was more than a 10 bagger. However, this morning, as of now, it is down 20%, and we'll kind of go into why that is, what to look for, and what to expect. So, we'll just go over the numbers real quick. It reported $3.18 billion in revenue, and if you see here, these are kind of the year-over-year growth numbers for the revenue. So the first quarter was 66%, and then you can see as it's kind of tapered off. And the bolded numbers are the guidance. So a company always gives guidance for the next quarter, and it's basically just an estimate of where they think the revenue numbers are going to be. And a lot of stocks, you'll see sometimes headlines where revenue earnings beat, meaning beat expectations that were made by the analysts, but says stock drops on lowered guidance. So guidance is a thing that analysts look for a lot and try to figure out where the company is going to be. And Nvidia, they released really bad guidance actually. So you see 66% in the first quarter, but then 40% in the second quarter, now 21%, and the guidance is negative 7%. So the first quarter since at least 3 years in which negative growth is expected. And this is really interesting because the company is at the forefront of the AI and machine learning and all of these movements. And so the cloud, and you'd think that demand would just be there like crazy. But I think there are a couple aspects. So for one, Nvidia, really their demand was crazy in the first quarter just because of the Bitcoin bubble. And so Bitcoin miners were actually using these GPUs as the brains for the algorithm so that they could mine Bitcoin. And what that did was actually create a shortage. So Nvidia, they just didn't have enough GPUs to go around, and so naturally the price was increased. So if you have supply and demand, and the demand is crazy, supply is low, of course the price is going to go up. And so that's why we saw this 66% number. But so Nvidia didn't have any idea when the Bitcoin bubble was going to burst. So naturally, I bet they created a lot of extra GPUs, and what that did was create kind of a glut in supply, meaning too much supply. So now we're stuck with lower demand and too much supply, which lowers the price. And so now we kind of see this slowing. And so that's my kind of guess on what has happened, and it'll be interesting to see if this is kind of the first signs of a slowdown in technology, because I think Nvidia is really at the forefront of a lot of trends in tech. So they basically, with their GPUs, they power, they're essentially servers. So a server is just something that powers, computing, and especially in the data center. So as you see, I broke out kind of the revenue segments. The data center saw $792 million in revenue this quarter, but that's still a slowdown. So 109% down to 58%. And then we also look at the sequential numbers, and a sequential number is just the growth from quarter to quarter. So year over year is from here to here, but sequential is from here to here, or backwards from here to here. And so the sequential numbers actually saw a huge slowdown in the data center, which I think is a little bit concerning, just because I don't know if the cloud titans, meaning Google, Amazon, Microsoft, the three big public cloud titans, I don't know if they're actually lowering their demand or if that's just they're waiting for the next upgrade of the Nvidia products. But it'll be interesting to see how next quarter responds, especially because of that negative 7% growth. And so we see in the gaming segment, the gaming segment is the biggest, and that slowed down so much. And so that's definitely why we see, and look at this, 32% sequentially last year to negative 2%, which is a huge difference, and something that I think should be a little bit concerning to NVIDIA investors. Of course, if you're in this one for the long term, I bet this company will be more valuable a year from now than today, just because it is so central to a lot of the tech trends. But these are a lot of the numbers. We'll look through the income. So non-GAAP net income will have a 36% margin, which of course is very big. So companies like Visa, which is incredibly asset light, their margins are probably about 50%, which is very, very big. Think about Amazon's retail margin is about, I haven't looked last time, but I can check. But I would guess it's about 3%. Same with Costco, about 2%. Like, these net income margins for retailers are really, really tough. But Nvidia, they have 36% margin, which is really good. So if you looked on the surface, 21% revenue growth, 36% margin, like, wow, this is a really good company. But the market always values a company based on expectations and based on kind of the relative performance. So that kind of gets into something called valuation. So when you have 66% growth and a 40% margin, of course the value of the company is going to skyrocket. So there's something called a PE ratio, the price to earnings, and Nvidia was trading for about 50 times earnings, which means essentially it'd take you 50 years to get $1 of earnings. And so like that's a pretty high valuation, but now it's trading for about 25 times, and that means kind of the value is cut in half. In terms of just valuation, of course, the earnings have increased, which we can explain that later, but the earnings increased 46%, which means that the PE ratio was not as compressed. And we have free cash flow, which this really decreased, and I assume it's because they're taking on a lot more inventory because of that supply glut. So I think it's really kind of a messy quarter because of the Bitcoin mining and stuff like that. It'll be interesting to see because it's kind of, there's these situations where companies have hidden growth, like a really small section of their business is associated with the cloud or something like that. It's growing at 100%, and then they have this legacy portion of the business that's like 5% growth, and then eventually this really small portion of the business overtakes the big one, and you see revenue start to accelerate. And we kind of saw the exact opposite here with Nvidia and kind of the Bitcoin GPU ordeal. So I just want to read through the conference call. I would advise, if you're a fundamental investor, to read through conference calls. You can kind of glean insights from the CEO and other management, and I think it's valuable for sure to kind of just get all the data points rather than just the financials. You can really see the company holistically. And what I like to do is I set up another spreadsheet besides that financial database called a company notes spreadsheet, and all I do here is kind of just take notes from the conference call or other articles that I read, and that just helps me kind of triangulate how the company is doing. So looking at the financials, looking at the company notes, and it just gives me more data points, and plus I can kind of share them with other people, and it's just a good piece of content to have. I think it's just a good practice to read through and take notes. And so that's all we'll be doing, just kind of reading through this. And what I'll do is read through and then stop when I think a piece is important. I'll kind of read it out loud, and then we can go over it It shouldn't take too long, but I think it's just a good idea to go through these documents. And in later streams, we can go through an annual report, really dissect what a business model is, what this company is doing, because I think people can really make a lot of money if you really do the work. So often I see investors looking at companies and they just don't really know where to start. They're like, how do I know if this is a good company? Should I buy Apple? Should I buy Facebook? Because I know those are good companies. And well, here's another thing. I think you can make investing as hard or as difficult as you want to make it. So let's look at Amazon. We all know that's an incredible company. So many people buy stuff from Amazon. But did you know that the biggest driver for Amazon is their cloud services? So AWS, Amazon Web Services, really is the biggest cloud provider in the world. And that just means that they give a lot of computing power to a lot of companies. But you could just know that you buy a lot of stuff from Amazon and buy that stock and then just hold it for 10 years and you'd probably do pretty well. Or you could be somebody who really gets in the weeds and looks at AWS and all this sort of stuff and you could do really well. So I think it's kind of, you can make it as complicated or as simple as you want, just depending on your preferences, your goals, your priorities, how much time you have. And so this is the thing. I love in business and I love kind of the puzzle of figuring out what's a good investment and just the game of figuring out the stock market. And so if you love that, I would definitely advise you to get in there and start researching, read all the stuff, read industry blogs, like just figure out how these companies are doing, what's the demand for their products, why these companies are better than other companies, and just go from there. So yeah, without further ado, let's get right into this conference call. And before I start, I like to use Seeking Alpha just for the conference call transcripts. So I'll actually read the conference call rather than listen to it. I think it just saves a little bit of time, especially you can kind of skim over the parts that are not as important. And so we see, Colette Kress, I presume she's the CFO. We can see, she's CFO. And so we see up here, these are the two things that will be the headline. So when CNBC reports on it, they'll say, beats on earnings, but misses on revenue. And this is a fairly big miss, 60 million. And so that would be kind of the headline, and then of course there'll be guidance like, terrible guidance, Nvidia drops 20%, plunges, will this be like a terrible stock from here on? You know, all the speculation. But let's look at the facts, let's really get into it. So revenue, 3.18 billion, like we saw from our other spreadsheet, up 21%, and all of their platforms, which are gaming, data center, visualization, and automotive. So visualization is basically like creating, it's like graphics. So there's something called ray tracing, which is really big in this professional visualization. So if you are a game developer and you're building a video game, you're going to use ray tracing to create like the best graphics possible. And then it's basically the supply side of gaming. So gamers, Bitcoin miners, they'll buy the GPUs, but professional visualization will be more like designers and stuff. And then you have automotive. So automotive are the brains inside of electric cars. So you have Tesla used to have a contract with Nvidia until they started to take that production in-house. But automotive, I think, eventually will be really big as more and more car companies will figure out that they need to have some kind of computing power inside the vehicle. And there's another really interesting sort of tailwind for Nvidia in something called the edge. So the edge is basically you have Internet of Things, you have all of these kind of hardware pieces that will eventually have little computers inside of them. And then it'll do the processing at the edge and send it back into kind of a centralized database. So let's think of a real life example. An example of edge computing would be Tesla, for instance. So you have a GPU inside the car, and it's kind of giving you all this feedback, giving you so autonomous cars. If you are at a stop sign and somebody walks in front, the car will essentially do some calculations, realize that's a person, realize that they shouldn't kill it, and just stay there and wait for the human to pass by. And eventually, using artificial intelligence and machine learning, the car will get smarter and smarter, but it'll be able to do so at the edge. So all that processing, well, this will probably be a long way out just because Nvidia and GPUs probably don't have the processing power to really sustain edge computing. And another thing is storage. Storage is really difficult if you have all of this stuff going on and you just have a car, like you don't have a server farm and a big data warehouse. You just kind of have a car. Like, where do you store all of that computing? Anyway, all the processing could be done in the edge, and it'll be just getting smarter and then send it back to the database, which can be pushed out to all other cars. So basically, at each point, each individual car is making the whole bunch smarter. And I think NVIDIA will be the first to kind of revolutionize edge computing. But that's another big tailwind for automotive. So I think the longer term picture of NVIDIA is still strong, but just the reality is, with the guidance of this report and the miss on revenue, I think that the stock will be really stagnant for at least the next quarter. But who knows? It'll be interesting. Anyway, that was a huge tangent, but I really find it interesting, all the technology, all the new trends, and I think NVIDIA is really at the center of a lot of it. And so I like to do the single page views just so you don't have to rotate through like 13 pages. That's not super fun. Also, let me know in the chat like what kind of questions you have, what things you think would be interesting, because this is my first time doing this and I hope it's interesting, but I sure a lot of people would be like asleep by now, but I just find it interesting. I just find like all the technology, all the numbers, all like business stuff, I just find it super interesting. And so if you want to become a better investor, that's what Investing City is all about. Let's go on this journey together. Please reach out to me. Reach out to me in chat. Reach out to me in the contact on my website. Like, I just love investing, and so ask me any questions. I'd love to get to know you personally. Yeah, so let's get more into this conference call. So the Q4 outlook, this is kind of them talking about the gaming, kind of the slowdown in gaming, reflects very little shipment in the mid-range Pascal segment to allow channel inventory to normalize. So yeah, I think that kind of confirms my hypothesis that in the second quarter they had that huge glut because they kind of had the shortage in Q1 and then they created a ton, but the Bitcoin bubble burst, so they have this huge glut of GPUs in the channel, and the channel is just, they usually use resellers or something called integrative service vendors, and what these people do are basically middlemen for NVIDIA. So NVIDIA will sell to these resellers, and then the resellers will sell on like websites, or they'll do affiliate programs, but it's just a way for NVIDIA to kind of get mass distribution. And so what they're saying is the channel, they're waiting for it to normalize. They had that supply glut too much, and now they're kind of waiting. It's taken a couple quarters for that demand to catch up. And I think another thing is that it's kind of in a weird place because they created a new GPU, and they're kind of in between cycles. So a lot of people with this supply glut, the prices are going down, but there's also another one coming out, and so they're like, should I get the old one? It's kind of like if the iPhone, they had the iPhone 8 or whatever, and now we have like the iPhone 10. If people were in between. They're like, should I wait for the 10? It's pretty coming out pretty soon, and so that also like affected demand. But here we see the channel inventory situation presents a near-term headwind, but it does not change our long-term fundamentals. So I think this is key, and that's something I will put in my notes just because I think it's a good data point to have. And so competitive positioning is strong as ever, and we expanded our addressable market with touring and a recent software announcement. And so addressable market is just how many people they can reach. So they have automotive, and they have gaming, and they have data center. So addressable market for Nvidia is probably one of the biggest around. I think like Amazon, of course, is bigger, but anyway, I mean, Nvidia powers a lot of Amazon, so it's kind of a picks and shovel play on the cloud, honestly. But here we talk about ray tracing, rendering. That's kind of also has to do with graphics, and then self-driving cars, of course. So here we see gross margins. It said it grew a little bit, and gross margin in this context would be you have a GPU, basically this little brain, this little server, and the cost of goods sold are how much how much it costs to make that little brain. And so you have wires, you have plastic, you have chips, like essentially it's a chip. But you have these elements. So if you had one GPU, how much does it cost to make that one? If you had a lemonade stand, the cost of goods sold would be like the lemons and the water and stuff like that. So Nvidia's gross margins are usually in the low 60%, meaning it takes about 40% of each dollar of revenue to actually make the chips. And so the rest of that 60% is Nvidia's, and then the net income that we saw was 36%. So we have this 60% gross margin and then this 36% net margin. So what's in between that? And it's something called operating expenses. So we have a difference of 24%, and those are all due to operating expenses. And operating expenses are research and development, so creating new chips, looking new technologies. And then we have sales and marketing. So marketing to those channel vendors and doing direct-to-consumer marketing, commercials like advertising and stuff like that. That would be under sales and marketing. And then you have general and administrative. And so general and administrative could be hiring new HR people and more general, like paper clips. You might need some paper clips for the office. Things like that. And then we get the net. Well, that's the operating income, and then you have to take interest expense if you have debt, meaning you have $1 billion of debt and interest rates are 4%. I don't know if I'm smart enough to do that math. Maybe that's 40 million. So that's interest expense, then you take taxes, and then you get the net income number. So in this case, I would guess that Nvidia's operating expenses are probably like 15% of revenue, which is fairly small, and then the rest of that is like taxes and interest expense. And so we see GPU revenue grew 25%, and Tegra processor revenue was down 3%. Tegra is a different type of GPU, I believe. So GPU revenue, of course, is stronger. I think Tegra is an older model. I don't know like the very specifics of Nvidia. I know a lot of people who know every single model. And like I said, you can make investing as complicated or as simple as you want to make it. Sometimes when you get really complicated, it's hard to kind of zoom back out to the simplicity of investing. But I think that's also important because, like, does it really benefit me to know every single model, or does it, like, am I better off just knowing the number of models that were sold, like, and the price points? Like, I can kind of infer by the revenue numbers how well each kind of model is selling. So I think that's something to keep in mind, just that fact. So we see a lot of names like GeForce RTX, Turing based, and that's kind of what I'm talking about. Pascal, like all these new, like I'm just kind of glazing over because I don't know each model super well, but I'm just guessing that new models came out and they're just talking about them. So the cryptocurrency wave has ended. The channel has taken longer than expected to normalize, and the Pascal high-end cards have largely sold through ahead of RTX. So yeah, RTX is the new chip on mid-range Pascal gaming cards. Both channel prices and inventory levels have remained higher than expected. See, now this doesn't really make a ton of sense to me. So we just read the channel has taken longer than expected to normalize. Pascal high-end cards have largely sold through ahead of RTX. So my first thought is, okay, Pascal is being sold, but then it said, however, on mid-range, okay, high-end versus mid-range. So the mid-range, that's what's interesting. We have the mid-range Pascal gaming cards. Their inventory levels are remaining higher. So we have kind of this high end that is selling, and I think RTX is also a high end card. But the mid range is these levels are remaining higher. I wonder if that's because the high end cards, because of the supply glut, kind of their prices were being pressed down, and then people were like, if I could get a Pascal high end for just a little bit more than a mid range, I might as well go for the high end. So I wonder if that was kind of what's happening, but that hypothesis is unconfirmed. I guess we'll read on. But then it said for the holidays. Sorry, I'm kind of stretching. I just went backwards. And then the next segment is data center. So data center saw 58% growth, demand remains strong, and then these are different products specifically for the data center. We have Tesla and VGX, and then a Turing 4, and then they're talking about Tensor, which is a software stack. So this new software includes two critically important capabilities that can drive deployment of the Nvidia inference platform at scale in hyper data centers. So second, it integrates with Kubernetes. So Kubernetes is something that if you're in the tech world, you probably know really well because it has gained a lot of popularity. And, I'm not extremely techy, like I know a decent amount, but it's basically a way to orchestrate containers. And a container, I might be getting ahead of myself, but it's basically a way to break up a tiny piece of code that can be ran, basically combined with other tiny pieces of code, in order to create better software. And the container is basically the thing that holds that tiny piece of code. And this is called microservices. And then Kubernetes is a way to orchestrate those little pieces of code. I think that's overly simplistic, but that's my understanding. Please correct me in the chat if I'm wrong. I love to learn about this stuff. And I'm no means say I'm the authority in all things tech, for sure. But it just interests me a lot, and I think that I have a little bit of a grasp on it. So if you come down here, an RTX accelerated render farm compared with the equivalent performance of CPU, as we're talking about, GPU has kind of replaced CPU, is 1/4 the cost, 1/10 the space, and 1/11 the power. So I think right here is the Nvidia value proposition. So I'm going to put this in the notes. So this is really the value proposition, right? Like if you could buy something for 1/4 the cost, and it takes up 1/10 the space, and 1/11 the power, like why would you not buy that? If it's 1/4 the cost, you can get 4, and it's still half the space of 1. So, and you still have like half power left. And then you have 4 times the computing power. So that's really like the value proposition that I see. And Nvidia is, in my opinion, way ahead of Intel and AMD. Like, I think just the competition is not even really that close right now. But some wonky things are going on in the financials just because Nvidia had that Bitcoin bubble sort of thing, and they didn't really know how to predict demand too well, and that messed up their supply, as we've talked about. So just moving on, moving to Pro Visualization. So it's saying it's strong. Pro Visualization actually had a record quarter, so that's something I'll be watching for sure. And automotive, I think automotive is still in the early stages. I think Tesla moving off Nvidia was a little bit of, it was a while ago, but I think people were like, oh, is Nvidia really that important, or is Tesla just think this is extremely important, so they want to do it themselves? So it could kind of like go both ways, right? Is Nvidia, can they be replaced, or is this such an important trend that Tesla is moving it to their own production? Anyway, right here they're saying moving down the P&L. So P&L stands for profit and loss, and another name for that is income statement. And as we talked about, the income statement, revenues, cost of goods sold, gross profit, and then gross profit divided by revenues is gross margin. And then you have R&D, sales and marketing, general, and administrative, and then you have operating expenses. So if you sum those three, you get operating expenses, and you have operating income, also called EBIT, or earnings before interest and taxes. And then you have EBIT, subtract interest and taxes, and then you have net income. And then out of the net income is where we get this number, right? And then earnings per share is basically the net income divided by the number of shares outstanding. So for each share of stock that you buy, how many earnings are you entitled to, if that makes sense? And then the company is usually valued on this per earnings basis. So if the quarterly EPS is about $2, if you annualize that, meaning there's 4 quarters in a year, it would be about $8. And then if you slapped whatever the current PE is, I think it's about 25, then we would get a $200 stock price, if that makes sense. So 8 times 25, I believe that's 200. And I think Nvidia is sitting around 160 as we speak. I think it's down 20%. So if we analyzed the EPS, then it would go out to 8, and then that means that the PE ratio is about 20, which that's really interesting because the trailing earnings of the stock market is about 20, I think, right now. So that means the market is valuing Nvidia as an average company, just an average run-of-the-mill company. And I think with negative 7% growth, it might be onto something. However, let's move on. So cash flow from operations. So we talked about the income statement a lot. There's something called the cash flow statement, and you start with that net income number that we were talking about. And, I'll do another live stream where I kind of have a little whiteboard and we can draw these things. But I hope this can kind of make a little bit sense if you are a audio learner. No, that's not the word. If you learn, anyway, drop that in the comments. Audio aided learner, whatever. So you have the net income, and you add back what are called non-cash expenses. So you add back depreciation, amortization, stock-based compensation, and then you adjust for balance sheet items when we can go into later. But what a non-cash item is something, you guessed it, non-cash. So there's something called depreciation, which is a way to expense a big investment that has to do with something called capital expenditures. So let's say Nvidia wants to create, well, they probably outsource their production, but anyway, let's say they create a factory. And so they spend $1 billion on a factory, but they're like, we we spent this $1 billion, but we don't want that to like destroy our cash flow. And so what they do is they depreciate the asset. So let's say the factory has a 20-year life. That means that a billion divided by 20 is 50 million. For 20 years, they'll depreciate the asset. So in each year, they will add back 50 million to the cash flow statement in order to get the quarterly cash flow, because it kind of smooths out their earnings. Because if they spent all this money and they had to record that as an expense, then their earnings would like to get destroyed and really would kind of disfigure the income statement. And the thing is, and I still need to learn a lot about accounting, because accounting is actually, there's a lot of depth to it, and you have to like kind of understand how each of these statements ties in together, because they all do, like the balance sheet, which is assets and liabilities and equity. Excuse me. How does the balance sheet tie into the income statement, and how does that tie into the cash flow, and then how does the cash flow tie into the balance sheet? Like, it's kind of this, they're all interactive. But having a good fluency in accounting is really important, and I think it would really help you as an investor. So if you're in college or something like that, I really recommend taking an accounting class or auditing it, or you could probably find enough good material online. So if you're out of college, as I am, like, let's do this together. Let's figure out all these sort of nuances. But here goes back to this mental model of as simple or as in-depth. Some people just get into the weeds in accounting. They're looking at all of the little details, everything, and that might work for them, but are they really creating enough alpha? So alpha is the excess return that you create in excess of something called beta. And beta is basically just how well the market does. So how much are you beating the market by? And if you're reading, like, if you know everything about accounting, will that really help you create more beta, or will your time be better spent if you knew a lot about technology or competitive positioning? Or you kind of have to figure out which are the levers for stock market returns and then allocate your time respectively. Anyway, we have capital expenditures, as we were talking about. Let's say they bought a factory. So in order to calculate something called free cash flow, which a lot of people really look at, you do the cash flow from operations minus the capital expenditures. And so in this case, it would be 337 million in free cash flow for the quarter, which a lot of companies would be drooling over, but for Nvidia, it's actually a semi-weak performance. So now we're done with the CFO's spiel, and then the analysts, usually sell-side analysts, will ask questions to management. And then the CEO, Jensen Huang, he will respond, and then the CFO will probably jump in and out. But this is really interesting because analysts, I mean, they're paid to dig into these companies, so they'll ask really really detailed questions, and sometimes you can glean some information that you wouldn't have thought of. And then eventually, as you read through these, you'll be able to figure out, like, oh, that's a good question, or like, oh, he was just asking that question because he's unsure about his little model, and his boss is breathing down his neck. Anyway, hopefully that makes sense if you have been investing for a while. But no, let's learn, right? Like, this is all about learning. That's what Investing City is about. And we're just trying to get better every day. That's what our little slogan is: make tomorrow better than today. And let's get into these questions. So this guy's asking about sequential growth in the data center. As we saw, sequential growth in the data center was 4%, which was a huge slowdown from last year's sequential growth, which was 20%. And so he's just asking, let's make sure that the data center is doing all right. And so the CEO's response: yes, we expect to continue to do well in data centers. Moore's law is something that states um, like the number of circuits on a chip increases by a factor of 2 every year, something like that. Um, so he's saying Moore's law has ended just because they've gotten to a point where physically they can't put that many circuits on a chip. Like it's just gotten that intense. Um, and so he's saying buy more CPUs because um, the only way to increase computational demand or computational resources is to buy more computers. Buy more CPUs because each one of those CPUs aren't getting much faster. And so as a result of that, data center capex would have to go up. The alternative, which is the alternative we offer, is one of the reasons why adoption of Nvidia's accelerated computing platform is growing so fast. Is because the approach that we provide allows for a path forward beyond Moore's law. So he's just talking about GPUs are better, and fight me. So this is a interesting thing. CUDA. So CUDA is basically the operating system for machine learning that was created by Nvidia, and about 1 million developers are on the CUDA system. And that's important because it really allows Nvidia to be a platform, and platform businesses are incredibly important because they have something that powers them called a network effect. So those 1 million developers are all developing with the CUDA language, and they're making stuff, they're building models, and all the while they're creating a more valuable environment for Nvidia versus AMD and Intel. They don't have really this ubiquitous software language that allows developers to build on top of GPUs. And I think that's a real differentiator, something that's probably underrated, undervalued in this space. And so I think that's something to really dig into if you're looking at Nvidia. So he's kind of talking like data center seems fine. I hope another analyst asks more questions. So I'm expecting our data center business to continue to do quite well. So he kind of stuttered there. You never know. It might be valuable to listen to that part because I'm telling you, even these little things could give way to bigger hints, and that's it's a good part of listening. You can kind of hear the intonation in people's voices and things like that. But I just like reading it. So the high-end Turing product, so Turing is, I believe it's the newest, and early demand actually seems to be quite strong. I think part of that is just the lineup. But do you anticipate your Turing-based RTX product families to drive sequential growth? Just what appears to be pretty strong demand. So the Turing launch happened towards the end of the quarter. It's the biggest generational leap we've ever had. Real-time ray tracing. So you're just talking about like Turing is pretty sick. And so they're talking about crypto stuff. I hope we get some clarity on this, just because I guess we already have. But one thing about Nvidia's conference calls is that they're so, like, they talk about the individual products so much and not really like, I don't know, I guess I'm just thinking out loud. So this is a good question. What needs to happen to work down this mid-range Pascal inventory? Remember we talked about that. Is it pricing? Is it something else? Because the thinking was that this could be cleared by the October quarter, but it hasn't. Do you think people are waiting for Turing to come out? That's kind of what I was talking about in between product cycles. Maybe that created some kind of pause. And then as a part of B to that question, maybe Colette, CFO, how should we think about seasonality in the April quarter, given that you mentioned it could take 1 or 2 quarters to work down this inventory? So that's a really good question. Yes, well, we came into Q3 with excess channel inventory post the crypto hangover. We expected the pricing in the marketplace to decline and decline slower than we expected. But while it was declining, we were expecting sales volume to grow, demand to grow, and for volume to be elastic with the pricing. think it just took longer than the pricing took longer than we expected, and the volume increase took longer than we expected. At this point, most of the pricing has come down to its and slightly below its pre-launch levels. So, yeah, I don't like the sound of that because I am just haunted by another hardware player, the infamous GoPro. My worst investment ever was GoPro, and I bought it right before. I think it was like I don't even know what that one's called. It's like the small one. I don't even know what it's called. But what they had to do was fairly quickly after it was released, they basically had to decrease the price to lower than pre-launch levels, and just the demand wasn't there. And then that really took the stock down. I'm telling you, like, stock just kept getting lower, and I was fairly new to the whole fundamental analysis. Like, very early in my investing career, I would day trade and try things like that. But as I started reading, I kind of came to the conclusion that day trading, like, there are a couple people who have made it very, like, they've done very well for themselves day trading, but a lot of these guys, they make their money off of the training courses and off of, driving traffic through clickbait. They're like, you want to make $1 million in 5 seconds? Like, buy this course now. Like, subscribe. And they just like buy all these YouTube ads and then hope that that can kind of drive the traffic. And it does. Like, people love day trading, and I'm not going to smash on day trading just because I know Twitch and all these platforms are basically set up for day trading. And I think a lot of people can do really well. With that said, I think the serious money, the big money, is in fundamental investing. Buffett, you have so many other, like Peter Lynch, all these huge fund managers. There's a few guys who would be considered traders. You have like Soros, but these guys are like macro traders. This dude took down like the Bank of England. These are, I can't really see them being glued to the tape. Like, there are some them traders like whatever Steve Cohen. I think he's really popular one. There are good traders out there, but I think that huge money is in fundamental investing. Plus, I just like business aspect of it versus staring at the tape all day. I think it's more fulfilling. I think it's more interesting, more stimulating. Not stimulating, more maybe intellectually stimulating. That's what I'm going for. Anyway, I hope you guys appreciate the tangents because I'm really going off on them. And so I'm hopeful. I'm reading back again, okay. So I'm hopeful that now the pricing has stabilized, that customers will come back and buy. I'm hopeful. I just don't like this language. I guess when pricing is volatile in the channel, it probably freezes some people waiting for prices to stabilize. And that took longer than we expected, frankly. But now that it's at the right levels, our expectation is that the market will return to normal. I don't like that. I just don't have a good feeling about that. He says I guess he doesn't know, right? He doesn't know what the demand's doing. I'd rather have a CEO be open. He'd be like, we messed up. I don't know. I'd rather have that than somebody who, like, has an eloquent answer that he pre-prepared. I guess pre-prepared is kind of redundant, but anyway, I think it's still a good company, right? In the short to medium term, it's probably going to go through a rough streak. The catalyst's basically a catalyst, something that will be like a turning point for a stock, something that will allow the company to go back up. I think the catalysts are lacking right now. So just be ready for the stock to stagnate for the next couple months, unless there's some kind of crazy revelation where they're like, GPU demand is like off the charts. So here's a follow-up on the channel inventory. It looks like it's roughly a 600 million kind of drawdown here. Just curious, does that sound right? Number one. Number two, does that fit with what you are hearing from your channel partners in terms of what's excess? And then as a part of that, are you drawing down inventory in the current quarter ahead of the Turing architecture launch? The last question I'm not sure I understand. The first question, you framed it nicely. The mid-range. What does that mean? Drawing down inventory in the current quarter ahead. Okay. So this is talking about the mid-range, he says. We haven't announced our future Turing product, but it would be expected for us to create a Turing GPU that serves the mainstream parts of the marketplace. That doesn't really mean anything to me. Anyway, so the drawdown, we're not really shipping into the mid-range segment so that we get the channel an opportunity to sell. I think it may sometimes Seeking Alpha messes up. We would like to see our channel inventory get normalized by the end of Q4. So here's a note. I think this is an important note. If you are kind of a swing trader, I think this is a really important note because they are looking to get the inventory normalized by Q4. So this is Q3. We'll have Q4, and then the end of Q4 we'll have Q1 of 2020. That's crazy. Well, at least for Nvidia, because their fiscal year is a little bit different than our calendar year. But I think buying Nvidia stock like before Q1 could be good. I think there could be a surprise, but for the next 2 quarters, I'm pretty sure it's going to be stagnant. I just don't see this company doing super well for the next couple months. Like, it's just honest. But that doesn't mean it's not a good company long term. I think it depends on your time horizon and how you like to invest. I'm not going to judge you. I'm going to tell you how I invest. Personally, I mean, there's an opportunity cost, right? If you're sitting in a company for 2 quarters, that's, 6 months, and it goes up 5%, which, okay, solid, right? If the S&P is wanting to go, on average, like 6%, you're doing 5% in 6 months, okay, that's fine. But if you find another stock and you're doing 30%, like, the opportunity cost is pretty high to stay in a stock that doesn't really have any catalysts. Doesn't have business momentum. Because business momentum really drives results in the short term. Long-term investing is tough because you don't know when the business momentum is going to turn. You don't know when it's going to revert back to the mean. And just my honest opinion, I've really come to see the value in momentum. I think a lot of investors discount momentum because, it's not what Buffett says. And what Buffett says goes, right? Like, he's the absolute dude, and of course he's the dude. He's like the best investor of all time. But I think it depends on your circle of competence. Like, if you know technology really, really well, it's natural that these companies are going to have momentum, especially software and SaaS stocks, meaning like software as a service. It's just natural that these companies are going to have momentum because that's the trend, right? But that doesn't mean that momentum is bad, I guess. That's what I'm trying to say. I think people discount it too much because I've seen that it really works. But that also could be just I've gotten lucky because, I started really investing kind of in the back of 2008, which is like the perfect time, right? And so it could just be my lack of getting punched in the mouth that's talking about momentum versus value, because value is underperformed and all these boring companies and the Buffettites are like, you need to buy low P stocks and book value matters. And like, I'm more of the camp of the internet has really changed the way business is done. And if you're not updating or adapting your views to like accept that, oh, maybe I should pay up a little bit more for an internet based company because of distribution, because of all these things, I just think that's too simplistic and you're kind of stuck in the past. Now, let's say a year from now, all these tech stocks are down 70% and I'm eating my words. Like, that is, like, that's probably not even say, like, I'm not going to say likely. It's very possible. Like, I just don't want to believe that's likely, but I think it's very possible. Just because these stocks are volatile, right? Like, if a company is overvalued and it goes up a lot, there is such thing as mean reversion, and I think a lot of euphoria happens, and then it corrects. And oh, sorry about that. And I don't know. I just think it's interesting debate, and maybe I'm too young and stupid to understand the depths of mean reversion and value investing, but yeah, I don't want to have too strong of an opinion, because once you form a strong opinion, then it's hard to change your mind. Because I think that's one of the most important parts of investing is being able to change your mind. Um, I think we so often get locked in to thought patterns and opinions that even though we low key know the other side is right, we lock into our opinion and fight back because it's become a part of our identity. It's become a part of like ingrained in us, and then we can't really change our identity super easily. So I think the solution to that is just not really have too strong of opinions that you feel like, I'm never changing my mind about this. Like, if you say that outside things like, okay, maybe faith, like, I think it's good to have conviction in some things, but if you say like, I'm never ever changing my mind, I think that creates a little bit of maybe a blind spot in your investing. Anyway, there's another tangent. You could take that to the bank. Threw that in there for free. Also, follow my blog. You can sign up for the newsletter, and I talk a lot about these kind of things, like behavioral investing and kind of just more things about life in general. Investing, of course, is important, and I love it. I think it's super interesting, but there's like, why are you doing it? Like, are you doing it just because somebody, you know, taught you about it, or you randomly stumbled upon this channel, or are you doing it because you have like a deeper sense of ownership of it? Like, are you a young person and you want to like be able to retire when you're 50 rather than 70? Or do you want to like allow your kids to your future kids to be able to go to the college of their choice? Or it's more like this freedom idea, and that's what I think is really interesting about investing too. Like, you can kind of take a little bit more control of your freedom, just by learning about business, just by learning about these different sorts of things. And I think, yeah, it's just a good practice all around. So we'll check the stocks right here. So, dang, you can take that to bank. That's my portfolio stocks right there. That's valuable, and you just saw it. Maybe I'll show you a little bit later, but so we're surprised, obviously. I mean, we're surprised by it as anybody else. The crypto hangover lasted longer than we expected. Prices started to drift down, and we expected them to come down much more quickly than it did. And when it went down, we expected demand to come up much more quickly. And so I think the channel wanted to prospect its price. People were uncertain about crypto, and the demand was uncertain about when the price will be stabilized. And so all of that uncertainty, I think, froze the market a little longer than we expected. Pricing is now down to below. Did I read that or just reiterate? Pricing is now down below pre-launch normal levels, and so I'm hopeful that we're going to see demand come back. So I think that's important. I think he really just restated what he said. I think that is a different question. Um, so that's really what it's about, this crypto stuff, and it'll be interesting to see how the market reacts. That seems like too many words to read, quite honestly, if I'm quite honest. Please leave some comments in the chat. I don't even know if anybody's gonna watch this. Like, if you are a person, let me just speak into the little camera. If you're a person who has watched this entire thing, may God bless you. Like, you're incredible. If somebody actually has the patience and the interest, like, please reach out to me. Like, I will give you my personal cell phone number because I just can't envision anybody watching this. Like, this is just my research process. This is the stuff I'll do at like 9 p.m. at night just because I'm interested in it. So I thought, might as well create some content with what I'm already doing. And so if you have watched this entire thing, like, please reach out to me because I'm so impressed by you. Especially like if you're an old person on Twitch found me, like, even better. Like, when I don't know, I've of course started Twitch because this would be kind of where more younger people are, and I actually met with a guy named Howard Lindzon last week who gave me the idea, and you should look him up on Twitter at Howard Lindzon, Lindzon, but he started StockTwits, and he was one of the first investors in Robinhood, probably like the most popular brokerage nowadays, the free trading thing, and I met with him. I just kind of reached out to him, and he was like nice enough to let me go down and have a quick meeting with him. And he was like, what's your deal? What do you like to do? And so I kind of just told him the story about investing Sydney. He's like, you know what? Like, it might be a good idea to get on Twitch and Discord if you're trying to reach younger people. And so I was like, for sure. Like, I know of those things, but I didn't even think investing live stream. Like, I thought that Twitch was just for gaming. So I have no idea if anybody's gonna watch this, and like, my expectations are really low. Hopefully you guys just blow my expectations out of the water. But anyway, he was kind of saying like, oh, it might be a good idea to start Twitch and Discord, and so here we are. But anyway, if you're like an old person, you found this, like, this is incredible. Like, please reach out to me. Anybody, honestly, I'm like very open. I think that's a value add for my business, is that I can engage with people rather than I have like, it's not like I have 100 employees where I'm like so busy that I can't interact with anybody. Like, I love to talk to people. I love to form those relationships, especially people I've never met. Like, I think that's incredible, and I think that's such a testament to the internet and the power of the internet, that we can create those relationships with people that are like-minded and just help each other. Gosh, I hope you guys enjoy these tangents, because I've been talking. This is like, I'm an introverted person, and I can never imagine myself talking this long, but enjoying myself. If I'm enjoying myself, I'll just be honest. Well, let's get back. So, Turing is the highest performance GPU at every single price point. I think it's all about crypto hangover. I think that's an interesting point about the Turing, because, like I said, I don't know the products maybe as well as I should. But Nvidia, in my own personal portfolio, is like a very small position. I believe it's my smallest. And I actually sold a little bit this morning. Disclaimer. Psst. Disclaimer. I just thought the quarter was not good. And like you were saying, kind of the opportunity cost. We'll see. So they're talking about data center. And I think that's really important. They're talking about how Q4 has been a seasonally strong quarter, and seasonality just means that some quarters based on the calendar year, based on demand cycles, are just stronger than others. So in retail and e-commerce. Q4 is going to be the best because of Christmas. Um, it's just that's that's seasonality. Um, and so they're talking about that for the data center. And what's he saying? So he's saying, I mean, the talk is that data center is doing well. Um, but I don't know if the numbers say that. It's just an incredible speed of adoption, and so I expect T4, that's Turing, to do well. So I think our data center business dynamics are just really quite great. In terms of forecast, we'll see how it turns out, but I think the fundamental dynamics are great. Um, so that's the lip service. We'll see. Because I think data center is really core. It's the fastest growing piece of their business, and I think the reason why I'm so interested in data center is because it's representative of a lot of other tech. So like all the stocks in my portfolio are technology, and Nvidia is the brains behind a lot of the demand. So I think it signifies a lot of the demand for technology. And so if you saw that slowing down, I think that could be like an early indicator of some more slowdown in tech. But I think it's pretty early. I don't know if I'm going to believe that narrative quite yet. Um, so more crypto stuff. Blah, blah, blah. Um, and not a lot of new stuff. I think the main thing that I kind of have got out of this is that data center is okay. And then kind of my original hypothesis was confirmed by management. Um, okay, this seems interesting. About 5 years ago, deep learning came into the probably front, and we were alert and agile to have invested a great deal and mobilized the company to go help the world put deep learning into software developers' hands all over the world. The area where I'm super excited about right now are the three that I've mentioned and that we've opened up in this last quarter with the launch of Turing and with the launch of Rapids. I think Rapids is their software announcement. The first is our film rendering opportunity. So, yeah, for animation films, stuff like that. Um, and then and the software stack from Kubernetes to containers, so that's what we were talking about earlier. And so that's the second segment of high performance computing is deep learning, and the third, potentially, and the largest currently, is machine learning. This is where Hadoop goes, this is where Spark. So we have um, film rendering, deep learning, and machine learning. Now, I don't really. So, machine learning is, I believe, like the edge, what he's talking about. And deep learning is more. It's basically like regression. It's like really smart regression. If you know what regression is, basically trying to find correlation and then package that up and then make smarter predictions from those correlations. Anyway, to sum up, the crypto hangover has left the industry with excess inventory, channel inventory. We're talking about the channel, the resellers usually take 1 to 2 quarters to work through it. Unexpected near-term setback and doesn't change the fundamental. So I think it'd be good to put this in the notes. Turing opens up 3 exciting markets for us. And I don't know, man. I don't know. I think that was an interesting conference call, but maybe not. Maybe not like most informative. Anyway, that was a conference call, and I usually read through the whole thing just for the sake of the live stream. I didn't want to read every single word. Probably even more boring than it already is. And so, yeah, I really appreciate you please join me. Maybe we'll make this a regular thing if I get some good feedback. I honestly don't even know how to find, like, how do you market yourself on Twitch if you don't really have a following already? Maybe it just goes in the stocks and bonds category and then people find you. Maybe I'll reach out to other Twitch investing people. But yeah, if you don't mind, could you please share this? I don't want to be those guys like, like and subscribe for all my videos. But I'm gonna be one of those guys because I think without that, like, people do that for a reason, right? Like, without it, I don't know if people take the initiative unless you're like incredible. And I don't know if I am. That's really sad. I should give myself more credit, I think. Wow. I don't want to leave you on this note. It's too sad. Let's Google something that'll make you happier. Best ways to cheer yourself up. Life hack. What do you guys think about life hacks? I think hacks are unsustainable. Feel it. What is that even? What? I don't know if I like these suggestions. Ask for help. Maybe I'll just ask you guys for help. How do I cheer myself up? That's a good one. Yeah, let me know if you have any suggestions. Anyway, thank you so much for joining me. Hope you learned a thing or two. Yeah, I hope I'll see you back again. Let me know when would be a good day to start these. I could just do it every Friday. But yeah, we'll see. Happy investing. Really appreciate you all. Bye.